Morning all, how are you all doing? Morning Mimo, morning Wojciech, morning Vitali, morning Paul. Make sure the microphone's working. Yes, it is. Good. Morning Danny, Sebastian, Robert, how are we doing? It's Friday, but it's Friday the 13th. So yeah, we'll see what happens. Excuse the attire today. I've literally just got back from the gym and I'm hot. Morning Gregors, how are we doing? So this morning we're going to have a look at what's going on with Iran and Israel and look for some opportunities on that. I'm not going to trade the indices this morning. The chances, I don't know what's going to happen today, so just really don't want to get involved. Keep it tight. It's been a bit of a sideways week, very choppy this week, and we've got a good chance of some big moves today, but I'm not sure what's going to happen today, so I'm keeping my powder dry, as they say, and just going to see what happens. We'll go through what's gone on with Iran and Israel, and we'll look for some opportunities to try and take advantage of this move, basically. So obviously the upshot of it, if we just let's start off with what's happened overnight. Morning. Oh yeah, was chat. You just said good morning to you already. Israel attacking Iran. Yeah, great. So I've just banked 0.5% this morning. Obviously, this is on this move that we've just had. So Euro Swiss, that one closed out at ADR. EA closed that out on that spike. Obviously, it's gone a lot further than that. So those two Euro Swiss ones. Aussie New Zealand closed out yesterday. So that was a nice exit on that one. That was a 2-trade hold. Got out of that yesterday, and also closed out Aussie US. So that one's also closed. But obviously, this move here is what's happened overnight, basically. So to do with Israel. So the other positions I've got on, I've still obviously got running, which is the Swiss yen, Euro CAD, and the pound US. We'll go back to, so today we've got Michigan this afternoon. That's all we've got, basically. Morning, Ismet. So that's the only thing we've got really planned and scheduled in today. So if we just go back to yesterday at 5 o'clock, this is basically where we were with the news. So Trump said he loves China. They're going to do a deal and blah, blah, blah. Auto tariffs might go up in the not so distant future. And then he went on to say about Iran is going to have to negotiate tougher with all this deal with the enrichment of uranium, etc., etc. 5:30 yesterday, Trump said Israeli strike is not imminent, but looks like it could happen. So that is and this is what we're dealing with Trump, outright lie. Israeli strike is not imminent. He knows it's coming. He was involved with it, obviously. Everybody has to run everything past the US, who's a US ally. It's part of the deal. So that is a blatant lie, obviously. Israel's strike could very well happen, but it's not going to happen imminently. Literally within 6 hours, it had happened. I don't want to say an Israeli strike is imminent. You've already said it. It's utter nonsense coming out of his mouth all the time. There's a chance of a massive conflict. I know within 6 hours there will be a massive conflict. Something could happen soon. It is going to. It's just utter nonsense, isn't it? So that was basically Trump's take on it. We had some NVIDIA news coming out in between, and then obviously it all kicked off overnight. So where was the first sort of report of it? US informs Israel it will not participate in an Iran strike. So this is obviously, Trump saying Iran must not possess nuclear weapons. So this is where it all sort of started to kick off. So Israel then put the first strike in, which happened sort of overnight, our time, midnight-ish. And obviously the markets all then started to move. The price of oil goes through the roof. Obviously, when there's conflict, there is usually oil disruption. If there's oil disruption, that means there's oil supply drop, which means demand doesn't change and prices go through the roof. Then we had lots of other things happening. Obviously, the stock markets all collapsed, et cetera, et cetera. So this is where it all kicked off. Trump plans cabinet level meeting as Israel strikes Iran. So obviously this was all going on in the background. Everybody kind of knew it was coming, apart from obviously Iran. The thing that was interesting in here about this is it looks like they've taken out a load of scientists and a load of quite high-level Iranian military leaders. So obviously Iran is going to now have to strike back. As an ally of Israel, obviously Trump is going to have to get America involved in this, which is going to create quite a large escalation with Iran again. So it depends who's going to get involved as to what happens with the markets moving forward. But basically, it's obviously all kicked off overnight. And we're waiting for the next sort of level of escalation of this. So today, obviously, Israeli Air Force began intercepting drones. So obviously this is we're assuming obviously Iran are flying drones back at them. So the upshot of it today is the markets are likely to drop. The stock markets are likely to drop quite hard. If you look at the DAX this morning, we've got a huge gap down opportunity here. Ordinarily, I would say go for the gap fill. I'm not sure today. So, I'm not going to trade the indices today because there's a good chance this could go either way. It could absolutely collapse down. It could just sit around down here going, what's going to happen next? Very, very difficult to tell. Let's have a quick look at the 5-minute open to see what's happened. So that's your 5-minute opening range there. So you've got roughly, it's massive today. The ORB today is huge. It's 938. So we're well over a quarter of an ADR. You've got back to that gap fill, 269. So it's basically roughly an ADR from the high of the 5-minute back to the gap fill today. So there is this is one of those days where the type of trade that you want to take, the ORB is a little bit too aggressive for this. Either go long, press the long button and put a stop under there, or press the short button and put a stop half an ADR away or something, because this is either going to do that or it's going to come up and fill that gap. What I think is probably going to happen today, as you can see from the Swiss franc pairs, is we're likely to get a safe haven run. So if you look at the US dollar Swiss yesterday, obviously we had a big move down on that today. So we had an ADR move to the downside today. Swiss franc and yen are going to benefit from this because the safe haven is basically where you put your money. So what typically happens in a conflict outbreak is the stocks get trounced. So you sell all high risk assets, which is stocks particularly, and some commodities. So you liquidate all of that and then you roll it into something that is safe, like a bank where you can store the money while you're waiting to decide where it's going to be invested next. The Swiss franc and the Japanese yen have the lowest interest rates out there. Therefore, they are the most stable. Yeah. This is why we always put our money in the Swiss and the yen as safe havens when there is some kind of trouble going on. So expect a run on the Swiss and a run on the yen potentially today. So we're looking for opportunities on all yen pairs to find a short. Yeah. So any kind of pullback, or in fact, it could just immediately drop. So the yen and the Swiss, basically. So you want to be shorting ideally in this situation, assuming it happens. If we don't get a safe haven run, if that was it and the markets are happy with that, that's it. But if it's not, you'll be looking at a good couple of ADR potentially in a safe haven run. So you're looking at the ADR dash, and you're looking for, you can see here already. Look, the Swiss franc. Swiss franc's already got 200 ADR, Euro Swiss 200 ADR, New Zealand Swiss 175 ADR. So the move's already underway. Any kind of pullback, second leg entry on it. So the next wave of attacks, the next wave of escalation, of which there is likely to be one, you are going to find more stock liquidated, and it will happen very, very quick. So the difficulty with this type of scenario is the opportunities come very, very, very fast. And if you don't spot them straight away, you'll miss them. So on low time frames like the 15-minute, you're looking for something out of the ordinary size-wise. I would have said if I was looking at the chart there and then, that would have been a lovely short. Obviously, it came back up again. But with this type of thing as well, you want to keep a wide stop. So don't go above the highs of candles. This is not going to help you. You want to be looking at putting sort of half an ADR, quarter of an ADR of stops on there. So for example, on New Zealand dollar yen, quarter of an ADR is 19 pips. It's 38 pips for roughly half an ADR. So if you're getting into a short here, for example, you're looking at a stop somewhere around about there for a quarter of an ADR. Half an ADR would be better, somewhere up here. Yeah, and you can see the ADR lines. These are all quarters. Yeah, so if you're getting into something, give it room to breathe, because you are not going to be able to time these. You're not going to be able to accurately go, oh, this is when it's going. It's either going to go or it's not. So it's something you get into, you put a nice wide stop on it, and you let it go if it's going to go. And if it goes, you could be looking at a multi-day move. They cannot liquidate all stocks in one go. You can't just go and say, right, sell all my DAX stocks. Yeah, because to do that, you need someone to buy them all. Yeah, and there's, in this particular sort of scenario, people are not willing to buy stocks. Yeah, you're not looking to buy risky assets. You're looking to liquidate risky assets. So trying to sell your stock is actually quite difficult. And this is why we get gaps. So basically what the market will do is they will just take whatever price is available for those stocks, and they will take a huge loss or a slip on the orders. Yeah. So you'll find that it moves very, very quick when it goes, if it goes. Yeah. So you're looking at a multi 3-4 hour move where the market will just go into panic mode and sell off. But there'll be a trigger. The trigger could be anything. So you need to keep your eyes peeled on what's going on here. So Trump saying that we will back Iran, that'd be nice, wouldn't it? We will back Israel, something like that. That's the sort of catalyst that will happen, or Iran launching a full-scale attack on Israel on the ground or something like that. You know, it's got to be something that's going to mean that there is a big escalation coming. But it won't just happen for no reason. There will be a catalyst usually in these sorts of things. So we'll have a look at all of those. We'll go through all the pairs in a minute and just have a look at where the land lies with everything. Don't overexpose on it, because obviously if you go, oh, I'm going to short every pair against the yen, assuming that we're going to get a run on the yen or everything against the Swiss, and it doesn't happen, you're just going to take a loss on everything. Yeah. So these aren't the sort of moves where, you know, you're going to be able to dive on it and stay on it for weeks. Safe haven runs tend to last 1 to 3 days, as it takes the time to get those assets out. So there'll be a decision-making process at banks and institutions this morning going, okay, we've liquidated X overnight. What we need to do throughout the day is this. Yeah. Look for opportunities to execute it, and it will just start to happen. They won't be able to do it all in one go, because you're not going to find enough people to take the other side of the order. Don't forget, this is called a market for a reason. A market is two participants exchanging. Yeah. If you haven't got participants this side wanting to buy and you want to sell everything, you have to go to where they are. And if those people are way, way, way down in price and you don't want to accept that price, you wait for some prices to come around that you want to take. So you'll likely see the market kind of grinding away, and then it will suddenly go. So we'll wait and see what happens with it, but we'll look through all the pairs this morning and see if we can find some opportunities. Don't forget, we've got Michigan later as well. It is Friday. It is the end of the week. University of Michigan is often used on these days to drive lots of volume into the market. So it could be that half an hour after the open this afternoon, we see a big flurry of orders coming through at that point. So just to quickly cover the news this week as well, obviously, it's been US week only. We've had very, very little news this week. Absolutely shocking for the US. Not one positive news event this week for the dollar. CPI came out quite down on what the forecast was. We were expecting it to tick up. It actually ticked down month on month. Same for the standard CPI instead of the core. We ticked down. We weren't expecting a movement on that. And annually, we ticked down as well. Then we had the GDP, a huge miss for the pound. And then we had the PPI numbers coming out, the producer price index. Again, we were a negative, expecting to go up a 0.5 move. And what we actually got was a 0.3. So down on forecast. Again, down on forecast for the main rather than the core. Unemployment claims. Unemployment went up. Yeah, it's all negative US. So if the Michigan numbers come out as a negative today, you've got another reason to get rid of that dollar. So probably one of the best things to look at the moment is the US dollar Swiss, because we've got confirmation that we've got weakness in the dollar. We've had nothing but negative news. So there's where the negative news started on Wednesday and carried on. Yeah. We've now got Swiss franc potentially becoming a safe haven run, which is going to put massive pressure on the Swiss, which is going to drive it very, very hard. And the dollar is really, really weak at the moment. So what you want to do is look for something where you're expecting strength in the Swiss franc, expecting strength in the yen. What's weak at the moment? Dollar. Yeah. So US dollar Swiss as a short looks really, really good. The difficulty is trying to pick where to jump in, because you've got this huge move here. If you stick a fib on this and look at a normal retracement move on it, you're looking at somewhere around here. So ADR today, ADR 125 today is kind of a shallow pullback. Yeah, but we've got these big propulsion moves. Well, it's not a very big propulsion move, but you've got these propulsion moves where we broke out the lows. So you've got that low there, this low here. Yeah, so these propulsion moves are those breakouts. Yeah, so likelihood is we're going to find a lot of selling pressure in there, a lot of selling pressure in there. But it's got to get there first. One thing happens to escalate this conflict. This thing's never going to get back there, is it? It's just going to go. So really good opportunity, US dollar Swiss. But as I say, the difficulty with it is the timing. So I wouldn't go lower than a 15-minute chart trying to find an entry, because 5-minute, you're just going to get lots and lots of signals, basically. You're going to get lots of little moves to the downside. This is looking bad at the moment, is it? But yeah, a reversal alert to the downside and then stick something like quarter to a half an ADR stop loss on it is probably a decent idea. So if you are going to go 5-minute, obviously, then wait for a confirmation, wait for a reversal alert to come in. 15-minute, look for the propulsion moves. Obviously, that is that hourly one that we looked at on the hourly chart. You've got to go an ADR. Yeah, so we've moved pretty much an ADR already down and back up again today. You're asking it to move another ADR to get up there. It's unlikely to be able to go 2 ADR in that direction. And we get some massive positive news from the US for some reason. But this isn't looking bad right now. It's stalling out. Look. So we had that big push, which gave us the reversal signal. And since then, for the last sort of 5, 10, 15, 20, 25, no, this is 15, for the last 2 hours, we're sitting inside bar on that. So, you got the break of the lows there as a confirmation, and then put a nice big stop loss and just wait a few days for that to drop. So not a bad idea on the US dollar Swiss. Just keep your eyes on this. Mossad commandos in central Iran deployed precision guided weapons in open areas near Iranian surface-to missile systems. This is a massive operation. This has been in the planning for a long time, isn't it? Iran airspace closed until further notice. Covert operations going on. Mossad commandos again. So we'll go through all the pairs in a sec. Let's just quickly see what the DAX is up to. Of interest. So we are trying to go long. Look, so they're trying to go for that gap fill. You haven't had a breakout yet on the 5-minute, and the 5-minute candle is big. Yeah, look at a normal 5-minute candle on the DAX. Yeah, normal big strong move. This is way bigger than normal, isn't it? So you may have actually triggered on that. Probably have actually just triggered along. So obviously, if you are long, go for the gap fill. But bear in mind, anything negative comes out, big pop to the downside. So we just catch up on the chat. Israel's prime minister, typical move, new conflict, and he will stay on his position, not going to jail. No. I think MT5 is broken again after an update. My ORB 3.1 stopped taking trades. I haven't checked. Whoa. My terminal seems to be working. Not sure I've updated it though. Wouldn't surprise me. MT5's just, it's fine 90% of the time, 95% of the time, isn't it? But when it's not, mine seems to be working anyway. Horrible time to short Swiss yen. So yeah, I've got shorts on at the moment on Swiss yen. So this is the one that you don't want to really concentrate on today. So if you're going to get a safe haven run, it's going to go into the Swiss and the yen. Yeah. So you don't trade the Swiss and the yen, because if the Swiss powers up and the yen powers up, this isn't going to go anywhere, is it? It's just going to go sideways. So you want to work a Swiss franc pair or a yen pair against something else that's fairly weak at the moment. So obviously we know the dollar is as well. So US dollar yen as well is another good short opportunity. But I'm already in Swiss yen from the other day. So yeah, it's just broken out into those highs. So we looked at those highs here before the propulsion move. And that's basically where we are. So this is quite possibly the high. And then we'll pull back from there. But as I say, today is going to be slightly different in the fact that you're not going to get normal price action, because the market's going to want to be looking at where its risk is, basically. The whole purpose of safe havens is to minimize risk. So you drive the money in, and then as soon as the risk is removed, you drive the money back out and back in. So obviously stock markets drop, Swiss franc rallies. When there's all safe again, stock market rallies, Swiss franc drops. So it's just money going in, money going out. There's a move starting at the moment on the Swiss yen. Look, see if that's yen strength coming through. Bit difficult to tell. Maybe. Euro yen, also good opportunity. Look, reversal alert has just gone in there. We're in propulsion. But we'll look through all those in a sec. Maybe we'll get the second leg on the S&P. Yeah, so S&P obviously, I mean, you can see obviously it's already done ADR today. It's gapped down. You know, just when you've got this sort of situation, there's two trains of thought. It's a really good opportunity to make a lot of money, but it's also a really good opportunity to get it wrong a lot during high volatility. If you get it wrong a lot, i.e. this thing just sits around and is it having indecision, the size of the candlesticks, this is the Globex session, yeah, on the S&P. So there's a bit of volatility coming in now. Look, if you look at the normal S&P candlestick sizes, yeah, and look at the size of the candlesticks at the moment, this is massively high volatility. So if it's moving this much up and down, yeah, you're potentially going to get stopped out over and over and over and over and over and over again. So you need to adjust and use very nice wide stops, basically, to do with the volatility. So ATR is a great indicator to use. ATR has gone up, so use wider stops. But if this is a safe haven run, don't expect that to go anywhere but down. Go with the flow. I would be looking at shorts only on it. But, you know, it's dangerous having a directional bias, because if your directional bias is wrong, you will be wrong all day. So that DAX, that S&P, remember I said about on Monday or Wednesday, wasn't it? We were getting to the point of no return. We were looking for that breakout above that high to confirm that we were going to run the all-time highs. We were looking like yesterday, we were going to run the all-time highs. Look. Yeah. So we had a push, a pause, a push. So it's looking good yesterday. World events changed. Now it's not looking good, is it? So it was looking like we were going to retest the all-time highs and going back into that bull market. Today, all different. If it all really kicks off with Iran, and Iran starts, that's the other thing I was going to say. One of the things that Iran said this morning, which was slightly worrying, was that they are going to blame America for all this. I can't remember where I saw it. It was on here somewhere. But they basically blame America for the whole thing. you go, Iran world now sees why we insist on nuclear enrichment. If you're going to have people just constantly attacking you because you want to have nuclear weapons, you need nuclear weapons, because if you don't have them, they're going to just roll you over, aren't they? So, you know, if everybody just got rid of them, we wouldn't have a problem. 200 fighter jets, blimey, that's a lot. I can't remember where it was, but I read in here that, oh, there you go. US will be held responsible for Israel's attack. Yeah, so Israel attacks, US gets the blame. US now has to be involved in it. This is not a small escalation. This is a huge escalation that's happening at the moment. And we're only like 12 hours into this thing. So, you know, when you're looking at what the markets are going to do, we're not going to have a Trump-esque move, but, you know, 200 ADR day to the downside is definitely not off the cards. But, you know, this is the problem you're going to find. Trying to time that is virtually impossible, because the timing is going to be like something hits. If you're not already in it, you're going to find it very hard to get into it, because it will do that. And you've missed it. You've just missed the entry. You know, so you've got to kind of get in, but leave yourself plenty of breathing room for getting the timing totally wrong. Yeah, got to give yourself really good distance. Sitting behind a propulsion gap is a brilliant thing to do. Yeah, if you get to a propulsion gap, if you sit behind the propulsion gap, you've got all these guys selling here. The chances are they're going to want to sell some more, because this is where they sold last time. So that's a really good stop placement. If you want to press the button now, give yourself half over 3/4 of an ADR, and assume we're going to drop for days. Yeah, there's plenty of room. But yeah, this is a rollover based on a news event. If it all calms down, we're going to go straight back up. That's the question. Is it going to calm down? We don't know, do we? I'm also short on the Swiss yen. Not worried, because next week is interest rate decision. And it's a possibility they lower it. The Japanese, no, Swiss, yeah. So the Swiss, obviously, if they drop rates, obviously that will come down. There's a chance they will drop rates, especially if they want to make themselves more attractive than the yen for a safe haven run. Then it's time to do it. But yeah, we'll see. On my chart, 2 different brokers, ranges are okay, but ORB3 is still setting sell stops. It's only setting sell stops. No buy stops. Us, have a look at your logs. How did ORB do yesterday? It was all right yesterday. Got some cash back yesterday, but there was nice clean breaks yesterday, but today is not worth bothering with. Today will be the day, you watch. Today will be the day that we get that screamer where it just goes and fills the gap all day. And I won't be on it. But also, I just don't trust it at the minute. You know, this is one of those things where you'll be in something and then it will just go like that, and then you'll trigger a short and it will spike back, and you get too much volatility, and it just... The trouble with volatility is it's what you need to make money. The problem with volatility is when it hits, the ranges are so big and so spiky that you just get stopped out. So normal strategy stop placements don't work, do they? Because you suddenly get stopped out because it's so whippy. It's just dangerous. It's better, in my experience, just to sit and watch. Abnormal trading conditions are good for... discretionary trading. So if you see something and go, I like the look of this long, I'm going to press the button. But you will be adjusting your stops based on what you see on the chart. Yeah. So that's a 3-to-1 gap fill, but don't expect it to do that in a day. Many days. Could do it in a day. Today, specifically, obviously, it could do as much as it wants. DAX gap run stopped out. DAX gap run stopped out. You've stopped out already? Hasn't gone anywhere yet. This is true for every country. I can't remember what I was saying. What's true for every country. I was probably reading a comment from ages ago. Right, so let's have a look at markets then. So obviously today, be careful because there's at any point, get nuke, yeah. Yes. If everybody gets rid of the nukes, then we go back to fighting normally, don't we? If we want to have a fight, which costs a load of money and everyone goes, ooh, don't fancy that. When you've got nukes, it's very easy to threaten, isn't it? This is the trouble with it. 5-minute range got stopped out already. Yeah, you will do. They say this is not a normal day. It's not normal volatility. You're not going to get a normal strategy operation in this. It's just not going to happen. No strategy that you trade with specific sizes of ADR is going to work in a day where the ADR is already done 200% before the market's even opened. You're not going to get the results that you would expect in this type of market. So just be careful. Keep it tight. I'd keep it flat today. So obviously, looking at all these today, we've got loads of weekly ranges suddenly hit. Yeah, yesterday we didn't have any weekly ranges. Now we've done 200% of our weekly ranges. Huge. So we've got monthly range hits as well. But obviously, these are all caused by that. RSIs, yeah, 4-hour RSIs lit up like a Christmas tree, but not because of normal market movement. Yeah, your 4-hour RSI extensions are there because of that initial dump. So what they've done is they've removed lots and lots of commodity pairs, put them into the Swiss and the yen. And obviously, this is the situation we're in now. So one or two things is going to happen today. It's going to calm down and everyone's going to go, all right, okay, that's fine. We'll assume that they're going to be calm. Highly unlikely. Israel have already said they're going to continue the bombardment for days. So the likelihood is that we're going to be continuing these moves. So everything that you've seen happen so far today, we'll go through all the pairs individually, but everything you've seen happen so far today is obviously a mean reversion opportunity. And it will probably mean revert. So you will be coming back up into that propulsion gap and you are coming down into support. So you're likely to find buyers down here, or there were before today. But don't expect it to suddenly get back there quickly. So if you take reversions off of these sorts of entries, you're going to be looking at potentially holding on to them for days, maybe even weeks, while this thing plays out. So just be careful. You've got two things that are going to happen with 100% certainty. We're either going to continue this run because the market is scared, or we're not. One of those two things is going to happen. Your job is to decide which of those camps that you lie in. I don't know which one to do. You don't know which one to do. You have to pick one. So it's just wrapping risk around the movement that you see. Position trading wise, if you get in long on a position trade, obviously the market will come back there at some point. So you might find it's a little bit longer than normal. There you go. There's a great example there. Look at this huge move down here. Large propulsion. Back to the propulsion. Then we sat around in the propulsion. Yeah, because this is where the sellers are. We sit there. The buyers can't get through because there's a large sell order. There's a massive buy order here. When we get down here, you're going to find it's hard to get through that level. Yeah, this is what propulsion gaps are all about. So that would be, if you're going to scale into a position long from here, that is where I would say be prepared to get there. Because if we are going to get safe haven runs and the commodity assets, Aussie, New Zealand, CAD, are all going to drop, but be prepared to drop for days. Yeah. And look at the distance here. You're going to have to move. That's 1 ADR, 2, 3. So be prepared for a 3 ADR move, which potentially is somewhere between 4 to 6 entries. Yeah. So be prepared if you press the long button right now that you're going to be in 6 entries for 2 to 3 weeks. Yeah. Worst case scenario. Best case scenario, you press the long button now and you're out within 24 hours, 48 hours. Yeah. So just plan your trades. Do not overexpose on these. There's so much that's lit up. Obviously, you know, this is already reverting. Look, so really good short opportunities coming up on all these. But these are all reverting already. So there's loads of them. Obviously, as you can see, the main ones are the Swiss. Excuse me. Really tired me out, that exercise class this morning. So the Swiss, obviously, very, very extended. Everything that you see here lit up is either Swiss or yen-based, majority of. You've got some commodity in there as well. But So we'll go through them one by one, basically. There's no point in looking at the dashboards because the dashboards are all lit up like a Christmas tree. We know everything's moved. So it's a case of finding opportunities. So I'm going to run through the top pairs that I'm trading at the moment first, which is the my sort of 7 main pairs. And then we'll go through the rest of them and just sort of have a look at how they're all going. FTSE's going down. I've got FTSE on here. DAX is gap filling at the minute. It's struggling a little bit though. Look, I mean, that's your 5-minute ORB. So you broke the ORB there. I mean, it's only pulled back about a third of the range, or about half of the range, maybe, isn't it? Yeah. So look, it's going for the gap. Will it make it? I mean, it's a hell of a move. Such a long way. So you've got to move an ADR. We've already done over half an ADR. So you're asking a big move today, aren't we? But yeah, just keep your eyes peeled on this. Iran Parliament to hold emergency meeting on Friday. I'm not surprised. We destroyed dozens of radars and surface-to-air missile launches in Iran. US Embassy has indications there may be missiles, drones, or rockets flying over Jordanian airspace. Oh, look at that. Volatility. Buying, currency strength. Everything's just gone crazy. Right. So we'll start with the Aussie New Zealand. So obviously I'm out of the longs on that. I was planning on potentially getting short, but I wanted to see what it did, and it just kind of ground down. So there's not a lot of movement in this pair at the moment. So I'm sitting around. You've got targets to the downside. You've got targets to the upside. I do actually like this more of a long than a short at the moment. But we are still stuck in this range. I haven't really found a good opportunity to get into it at the moment. Reverse alert has just gone in this morning, but as you can see, it's all part of this whip. So I'm kind of leaving that one alone for the minute. Aussie US, so out of the shorts, looking for pullbacks into propulsion, basically, to start a new short position. So easily come down and test these lows, which is your 1 week low, your 2 week low, and your 3 week low. So this whole area here is where the buyers are sitting, which is 200 ADR. We've already moved 125 ADR, of which we're pulling back on now. So shorts in here look pretty good to me, Aussie US. That's going to need US dollar strength. Commodities are going to come down, potentially, apart from oil, on a safe haven run. So the Australian dollar will be affected negatively, but the dollar is weak as hell at the moment. So what you're doing here by shorting this is you're buying the dollar, which is not the best thing in the world to do. Look at the news that we've had this week on the dollar. Negative. There's just nothing positive. If we get bad Michigan figures today, you can kiss the dollar goodbye. So this isn't the greatest trade in the world to take at the moment. Yes, you're likely to get weakness coming in here, but where are you going to get that US dollar strength from? So that needs the dollar to be strong. So not the greatest trade in the world. We've got this lovely little support here, which potentially could also act as a bounce point. So I'm not really too interested in taking that as a short. As I say, I'm already out of the short today from last week, and I'm just kind of staying dry on it at the moment. We are bang in the middle of the range. Look, I want to be trading from here or from here, really. I don't want to be trading from the middle. So sticking out of that. Swiss yen, in short already. Missed my opportunity for third trade today. We spiked up through the next short zone and then pulled back down again. So I've got this short on here. Would have been nice if we'd have got an ADR today. If we do get an ADR today, third entry will come in, average will move up, and this propulsion gap will become my target. But right now, target is down in this propulsion area down here. So I'm already short on that one. Not the greatest thing to be in either direction, because if the Swiss and the yen power up, they're just going to go sideways a lot of the time. The Swiss typically will be the stronger of the two currencies if a safe haven run occurs. So you would expect, if there is a safe haven run, to get more movement to the upside on the Swiss. But when it all calms down, you will also get faster movement to the downside. We've got interest rate decisions on both of those next week, so it could be some movement coming on those. Morning, Blue Trader. Today, we are still waiting for the summer. Yes. Really nice and warm over here, but it's also very... we've got a thunderstorm coming, apparently. But they keep saying that, and it doesn't happen. EuroCAD. So Euro broke out straight into resistance. And we have pulled back down again now. So all your head and shoulders traders out there are getting ready to hit this hard. Yeah, so big push up. Bang. Neckline is broken. They're all short. So selling this back down into a propulsion is great. I'm already short. Head and shoulders fails more than it works. So, yeah, if this one works, brilliant. If it doesn't, meh. We're coming back up into propulsion. So my next entry on that one is up here. Average is there with 3 trades on. So this propulsion target to the downside is a nice area to take that one off. But I'll wait and see what happens today, obviously. EuroCAD, the euro is unlikely to be affected by what's going on. It's not, I mean, obviously NATO involvement could affect it, but other than that, not really any reason why this one should particularly move. The CAD will move the dollar. The CAD will also strengthen up with oil, which is happening. So there is potential for that move with Canadian strength, but there's nothing really moving the euro at the minute. Euro Swiss, obviously big, strong push to the downside. This is pulling back beautifully. Look at that. So we've done 200 ADR to the downside. So there's your safe haven run. This is the undoing of that safe haven run at the moment. I'm going to hit the short button on this one because it's lovely. So there's no strength in the euro at the moment. As you can see, there's absolutely no reason for the euro to be strong. They're reducing interest rates. Lagarde has just said that they're going to freeze interest rates for the next month, possibly 2, maybe even a quarter, but definitely not increasing interest rates at the moment next month. So that is neutral to negative euro, which means basically if we're going to get more Swiss safe haven, this is it. So M15, looking for signs of weakness, sell stop in place. So sell stop ready to go short. Euro Swiss, we've pulled back pretty much. We've done over half the pullback already. So it's either going to do a V-shaped recovery and then sit around, or we're going to do a drop second leg. If it does a V-shaped recovery, I still fancy it short. So Euro Swiss, I'm going to take a short. So pending order is in. The EA is running on the VPS. That will just trail that pending order underneath candle lows until we get some bearish price action. So that's first entry going in on Euro Swiss. Obviously, it's range bound at the moment. Yeah, so there is a bounce off of these lows. But, this is part of a safe haven play. It's not part of a support resistance bounce. If we do get a safe haven run that's going on for days, we will break that low. We'll come back down and test the previous monthly, which is like 3 ADR away. So there's loads and loads of room. In fact, it's further than that. 150, 40, 80. Yeah, it's pretty much 4 ADR to the downside. Loads and loads and loads of room. Euro pound. So I got out of the longs on this one on Tuesday, where we broke the highs. So I've been waiting to get out of this for ages, stuck in it. It was costing far too much in swaps. So you can see I took profit on those 2 positions there. The rest of it, I just decided to get out there as we were hitting the upside resistance again, and then it broke. And obviously we've had all this movement. This is the pound weakness yesterday on the retail figures. So pound weak at the moment, euro neutral. So yeah, we've just come out the monthly highs, which they sold off. So yeah, like this as a pullback at the moment, but the extension was there yesterday. I didn't take it. But I'd be more interested in shorts than longs on it from where we are at the minute up here. But obviously these two not really going to move on this stuff that's going on with Iran and Israel at the moment. So it would just be normal price action. So we're kind of, it's a very ugly move after this move that Trump caused. So support resistance bounce, that's beautiful. Look for it to come back down into where it broke from. So you've got roughly 175 ADR to the downside. Lovely bearish engulfing. I was almost hit the button then. That looks so good. I'm just going to see what my exposure is on the... I'm not going to take this. I've already got Euro CAD and Euro Swiss. So I'm not taking Euro Pound as well. It's totally, I'll be overexposing myself on the Euro. But yeah, that looks really good. Look, reversal alert, off of monthly resistance, retest in propulsion. That is your M pattern. So that break of that low of the day, so low of yesterday's, end of day, or open today, if you like. If we break that, watch this area here, this propulsion move. That's the breakout above that high. So there's going to be buyers sitting here. But if we break this low today, we should come and test this area. If we test this area, it will probably find some support. It will also be 125 ADR, so the market will be exhausted by the time it gets there. But if it does break that area, you're coming back down to retest here. So loads of downside on that one. Lovely M pattern reversal going on. Pound US dollar. So I've got another short that went in this morning on that one. So I am now 6 short. That's my average, 225 ADR. I have banked on it once. I don't think the swaps are too bad on this one, pound US. Swaps, $40 a swap. It's not a big deal at the minute. So yeah, obviously we've had that massive weakness in the pound off those retail numbers, but we've had more weakness in the dollar. So this is a prime example of what I keep saying about a weak currency against a weak currency is no movement, because they're both weakening, which means neither can get an advantage, which means you just sit around in ranges. The pound had some definite negative news yesterday. We've had this big, strong move down on the news of the Iran-Israel conflict. I'm not quite sure why this got hit so hard. I'm presuming it's dollar. Yeah, so strength came into the dollar on that Iran news. So, yeah, I mean, we've just had a reversal alert. That's the propulsion move to the downside. Look anywhere in here for sell orders if you're not in it short. If you want to get into it, somewhere in here potentially is a nice little short area. Obviously, market structure at the moment is bullish, but it's just double bottomed on yesterday's low at 125 ADR. So the chances are you're going to find it hard to get down below that level today. But we've got University of Michigan, which could come out as a massive positive, driving that. But you've also got University of Michigan could come out as a massive negative, and we'll be back up at the high of the day. Either of those. So at the moment, I'd like shorts out of there. I'm already short on it, obviously, up here anyway. But yeah, it looks like a good-looking potential short opportunity there. Oil, obviously, through the roof. Don't forget to hit the like button. It's hard to find quality content on YouTube. There's a lot of quality content on YouTube. Unfortunately, most of it is trying to sell you something. Oh, John. Yeah, so obviously look at the price action. Yeah, normal days, normal price action. Holy crap, we're going to war. Yeah, war is good for oil. So if there is conflict, we need more oil. Yeah, we've got a lot of machines we need to power. Use oil, petrol. Whenever there's conflict, oil supply gets restricted. It either gets blown up, oil refineries get destroyed, or pipelines get disrupted, or countries decide to fall out and just stop supplying oil. Prices go up. Yeah, so everything that is to do with any kind of conflict, oil goes on the rise. If you go back and look at when the Ukraine conflict kicked off, I'll give you a guess as to where the Ukraine conflict kicked off. You can probably spot it. Yeah. This is where we are right now. If this is going to be a long-term escalation, don't be surprised to be up there within 2 to 3 months. Unlikely, I think it will get that escalated. But if it does, this is the start of the move. and you've got your immediate knee-jerk reaction and gap, and then this is your first pullback. This is the first rejection candle we're having out of propulsion. Yeah, 50% retracement into propulsion. Good buy on oil. Yeah. So that's a lovely little buy opportunity there. Confirmation price action coming in. Wait for that candle to close. You've got 8 minutes on that candle. It is a rejection. It's closing bullish. So we are pulling back, and the buyers that started buying oil are potentially buying their second batch. Yeah. But again, look at your stop loss placement on this. That's where you are at the moment. If you long this right now, half an ADR on this is 9. An ADR on this is 18. That candle is 14, roughly. Yeah. So that candle there is 3/4 of the normal average daily range of oil price. Yeah. So bear that in mind when you're getting in. Don't get in with a 1/4 of an ADR stop. That's 4 pips. That's here. You are going to get stopped out. Look at the size of these candles. Each of these candles is an ADR. ADR is 18. That's 16. That one's 10. 13, 19, that's an ADR. That is obviously way more than ADR. That's 30. So we've moved today 70. So 20, 40, 60. We've moved 350% of ADR today. Yeah. If you're going long now, you're going to need to give it a very nice wide berth, basically. Really fancy that long. Haven't got the EA running on oil. Looks lovely, doesn't it? But yeah, there's a long opportunity there on oil. I don't trade oil because oil kicks me in the butt. So I'm going to stick to my rules. But yeah, if you like it, take it. Yeah, but look at the size of the normal candlesticks on the hourly chart. Look at where we are now. Look at the volatility. Do not use normal stop sizing. It's got to be in line with what we're doing at the moment. So stop would move up after each candle. My EA is running on 1 hour chart. Yep. So if your EA is running on a 1 hour chart and you place a sell, so for example, if you were to place a buy stop there and your EA is running on a 1 hour chart, your EA will trail that stop every hour. So every time a candle closes, the EA goes, okay, so let's say this moved down and the high of the candle, the next candle was there, the EA would move it down to there every time a candle closes. If you run it on the 5-minute chart, it will move it down every 5-minute candle. If you run it on the 15, it moves it down every 15. If you run it on the hourly, it moves it down every hour. Sorry, bear with me a sec. So yeah, obviously bear in mind, obviously, the time frame you're running on. If you're running on small time frames, it's going to move a lot faster, that trade. Aussie dollar CAD. So sideways Aussie dollar CAD. We've had that big push down. We've got all these massive wicks going on down here at the moment. So again, Canadian dollar rallying, oil producer, oil prices going up, CAD's going to go up. Commodities tend to get hit. That's going down. So we'll see where we go. SMCI, all parts, all chips, cybersecurity, NVIDIA quantum chips, all data centers, self-driving cars, charging centers, all parts come from SMC. Data center, all types of drones. Okay, so you're advertising in the channel. Good one. Not sure what you're advertising. I'd consider learning to speak and type first before you start advertising and spamming channels. But anyway, don't know what that means. So yeah, pullback short at the moment. Obviously, if it continues. So everything you need to look at today when you're looking at movement we've had is assume if it continues to escalate, it will continue in the direction that we've just had. If it calms down, it won't. Yeah. So you're either going to get a V-shaped recovery or you're going to get a second leg drop. Yeah. So this one's obviously massively wicky, so very hard to get into at the minute. But look at the distance you've got to go if you break that monthly low there. Yeah, which we've tapped into today. If we can break that monthly low, that's your first area of potential support, but all the way back down. So loads of movement on this one. Aussie dollar Swiss, obviously the Swiss franc. So this is another great one. So we've come out of propulsion, look. So this buy here, tested, added back in. So looking for continuation shorts. So the Swiss franc, obviously look for sell opportunities. This is the pullback. That's yesterday's low. This is obviously the safe haven run, 200 ADR. So we're pulling back on the safe haven run, second leg, which might just sit around for the rest of the day while we're deciding, and then Monday. Don't know. Don't forget, we're Friday. We're Friday the 13th as well. You've got the market closing today, and then you've got Saturday and Sunday where all hell can break loose. If all hell breaks loose Saturday and Sunday, Monday morning, the Swiss franc will have gapped massively. Yeah. So if you are short on Friday and everything calms down over the weekend, you might get a little gap up and a problem, and you'll stop out. If it goes mental over the weekend and everything escalates, you are going to gap down. So you need to be in it today with the assumption of that happening if you're going to do that. Yeah. US dollar Swiss just hit ADR. So yeah, lovely pullback going on here. Again, 15-minute time frame, 5-minute time frame. Wait for signs of weakness to come in. Things like sticking the move. Obviously, if you're using moving averages, a 9 EMA entry is a good one to use. Any kind of reversal alert that you get, 3-bar reversals short, any kind of signal that basically the market is starting to turn. At the minute, it's not giving you any indication. You had a kind of reversal starting there, which didn't work out. So you got this lovely big candle in here now. So as long as we're continuing to push up, stay pushing up. As soon as it starts to break to the downside, that could potentially be the start of the second leg short. So jump in on that one. Aussie dollar Swiss. Aussie dollar yen, same with the yen pairs. Yeah, the Swiss franc and the yen are going to do the same thing. They're going to be the recipients of safe haven move. So big, strong push to the downside. This is your pullback into the previous day's low. So potentially right now, 5 minutes, this is starting to reverse. There's your bearish engulfing just gone in. So we are now potentially flagging and breaking. That's your reversal alert. So if we break down below that low, we break this propulsion gap, that low will go and this will come back down and retest those lows. So this is potentially out of this. I mean, this whole thing is one massive propulsion move. So the whole thing is this one big drop, isn't it? So good looking short opportunity there. Aussie dollar yen. Mordy long yen. So yeah, good looking opportunity on that one. CAD Swiss. Right, so this is pulled back in. This is now in propulsion. So for today, look, the reason this one is doing so well is because it's Canadian oil. Oil price is going through the roof, obviously, which is pumping the CAD. That's why US dollar has also rallied as well. Just thinking about it now, it's obvious. Dollar rallied because of the oil price. So if oil price continues to rally and it continues to escalate, that is potentially where your dollar strength might come from. So, that's giving a reversal on this one, CAD Swiss. That leg there is potentially, this is exactly where we want to start looking to getting short on this one as well. So drop down. You need some weakness though. Don't just get in. Get in when there's some signs of strength coming back in your direction. Yeah. SMCI is Super Micro Inc. Yeah. Yes, bullish NAS is the suggestion. No, he's a signal service, so obviously he knows absolutely nothing about trading. Go buy his signals. Make lots of losses. CAD Swiss, yeah, like it as a short at the moment. However, this is probably not the best pair to trade. So remember what I was saying about strength. If we get a load of strength coming in the Swiss franc and we get a load of strength coming in the Canadian dollar because the oil price is rallying, what are you doing? You're buying a strong currency or you're selling a strong currency against a strong currency. Likelihood is it's going to just get pushed up and down all the time because of the strength and the weakness cancelling each other out. You're better off finding something that's going to be weak and trading it against something that's going to be strong. So Euro Swiss, good opportunity. Shorts at the moment, but obviously we'll see what happens with that oil price, which is going mad at the moment. Not the greatest opportunity, that one. CAD yen, again, strong CAD, strong yen. Not really potentially going to go anywhere, is it? It's getting a lot of this movement. So downside targets, all upside targets now complete. So looking for downsides. Again, not the best one in the world to take at the moment. Anything that you're looking at with the CAD and oil is going to be tricky. So probably I'd steer clear of the CAD ones because they will be volatile. Lots of intraday movement, obviously. So you just need to find an opportunity to get into it, really, if you want to take it. But I mean, it's not the greatest thing in the world, is it? Euro odd, so big spike up on the euro against the Australian dollar, Australian weakness. Again, this one potentially not the greatest thing in the world to trade. That is more likely what's going to happen, but there's not really any strength in the euro. So we're relying on the Australian dollar continuing to weaken. This is a breakout of the previous highs. So we based basically here for ages. We had a couple of false breakouts, so price discovery failures to the upside. Then we came back and tested the opposite side of the range, and that is the buy. Yeah, straight up into propulsion, which is where we sold it previously. So at the minute, it's difficult to tell. This has been caused by the Iran incident. However, we do know there are sellers in that zone who have driven the price back down again. Is this exhaustion because of the move, or is this sellers not letting the price through? So this could go either way, this one, couldn't it? But there's your high. That's your invalidation of that trade idea. If you like it long because you think you're going to get continued weakness in the commodities, and Australia is a commodity pair, then you want to be buying it out of propulsion. So buying it down here, looking for a push up, or you could look for a double top sell. Yeah. But tricky one, that one. It's stuck sideways, going absolutely nowhere at the moment. Euro yen, big drop to the downside, pullback, continuation short. So yeah, this is a lovely short. So yen strength we should be seeing off the back of the safe haven run. So looking for it to come all the way back down into there potentially. Euro New Zealand, again, New Zealand will weaken on commodity move. So again, very difficult one, this one. This is very range bound. CAD Swiss 125 ADR. Really strong Canadian dollar. Yeah, look at that. That's indecision. So this is the start of a 3-bar reversal. Yeah, visualize this candle. This is a great entry on a presumptive 3-bar reversal. So you think into the future, I'm expecting a 3-bar reversal here. Buy it now, you're going to get that a little bit extra. Wait for the confirmation, and you can get in with confirmation. But if you want to get in before confirmation, it's now, isn't it? If it's a 3-bar reversal, it's not going to validate that low. So it's very simple. In there, stop there. First target. But obviously, if this carries on, oil's not going to stop. So, I was like, you in New Zealand, wasn't I? So you in New Zealand, yeah. Same as Euro odd. Same thing. Basically, take one or the other. Euro US dollar, M pattern reversal up at the highs. So again, this dollar strength coming through on potentially on the oil price. It's very hard to tell what will happen if the US gets involved in the conflict. Potentially, we're going to get a lot more strong movements on the dollar as they get involved in that, but it could also have the negative effect of weakening it dramatically. So it's very difficult to tell. However, obviously, at the moment, we know that dollar is incredibly weak. Yeah, so it's had nothing but negative news for days. And obviously, with what Trump's doing, destroying the way that the dollar is used, it looks more like you want to be doing that all the time. Right now, obviously, is a little bit of a different story. But at the minute, this is the monthly high, and we're rejecting out of that monthly high. If you look at yesterday, we had a beautiful reversal alert go in and a lower high. So market structure reversal, absolute textbook M pattern. But this leg of the M pattern was caused by the Israel incident. So it's, whenever I see a beautiful price action pattern that's textbook, but the textbook move has been caused by a fundamental, it's just coincidence, isn't it? So I would be looking, I mean, it's already happened, looking for a retest of propulsion to sell it. It's just done it, hasn't it? So that's really your safe area today. If this move is going to continue, we shouldn't get back above that propulsion gap, because the sellers that started to sell there won't want that price invalidated. So that is where they will hold. That is also the previous monthly high. So yeah, it looks good for shorts from there. Obviously, you've missed a lot of the move, and the pullback there on the 5-minute chart is here. So your reversal alert when that goes in is confirmation really on the 5-minute time frame. Pound odd. Again, pound pushed up into the highs. Again, all this is caused by Australian dollar weakness. The pound is weak at the moment, obviously off the back of retail. The Australian dollar is weak. A week against a week equals a range. So there's not really any main advantage of trading this one at the minute. Not a bad area for shorts up here. If it does break that, though, I mean, it's just such a long way, isn't it, before you get anywhere else? I'd be more inclined to just watch this price action. So this is your high. That's where we've tapped into today. Yeah, looking good for shorts. But, you know, it's a weak currency against a weak currency. Probably not going to go very far. Pound CAD, this one's moved obviously on the back of the Canadian strength. So Canadian strength driving this one down. Pound is weak on yesterday's GDP numbers. So there's your GDP number that came out yesterday morning as a massive negative. Sorry, did I say retail earlier? It was GDP, wasn't it? Yeah, GDP yesterday, massive negative. So yeah, this is the continuation market structure. So I'll be selling that. Potentially selling this, and then looking for a test of those lows down there. So again, drop down, 5-minute time frame, potentially. Just had the reverse alert on that, so that's good looking short right now. Pound Swiss, same thing. But looking to short it now. Good time shorts. Look for that to drop. Watch this area here. If it does break back up and we get a V-shaped recovery, we'll then probably come back up and retest those previous lows, which is this propulsion gap, which they sold back again twice. So that'll be a third test of that area there. But again, Swiss franc. Yeah, this is at the moment, this is kind of like a panic and unpanic, waiting for the next piece of news to give the second panic. That's the way I'm looking at this at the moment. It may not happen, but if it does happen, that's your trade opportunity. Pound yen. Same thing, safe haven run, pull back, second leg, pull back into resistance. Yeah, we got that little propulsion gap if it gets up to ADR as a short as well. But look for signs of weakness creeping in. If there isn't any, don't take it. But there was a nice reversal on the 5-minute there. We have just invalidated that high, so that is an uneven M pattern reversal. So if we break the low of that, that's your short. Pound New Zealand, it's already reversed. So this is potentially next leg coming in. Beautiful resistance, look. So retest of this area here. New Zealand dollar CAD. New Zealand dollar CAD's a bit of a tricky one because you've got the commodities. This is the same as the Aussie dollar CAD, basically. You've got these lows down here, and obviously this is the rangiest thing on the planet at the moment. I wouldn't want to know. I wouldn't know what to do with this one at the minute. It's very difficult. Oil price continuing to rise, continue that down. Commodities continuing to drop, continue that down. So yes, I'd much rather short it than long it, but I want to be somewhere up here. Always be shorting on a pullback, ideally. So you need that movement back up into there. I think it's going to be quite hard to find a movement back up into there today. It might do. If it does, then there's your opportunity. That's the Wednesday low there, which is halfway through that propulsion move. So that's the move that broke the lows. Obviously, they seem to be holding that at the moment. So I just don't think there's going to be an opportunity to get into that one today. New Zealand dollar Swiss. Big old break. So there's 175 ADR, just looking at where we've actually moved to on that. So we've broken this low, we've broken the last month's low, and it's pulling back into propulsion. So again, lovely short opportunity. This one could go quite a long way. But obviously, safe haven runs do not last forever. They are short-term moves. That's a great sell there out of the previous day's low. If you can get back there, that would be a lovely spot to sell from. But again, New Zealand weak on commodities, Swiss franc strong, safe haven. So just wait for some signs of strength in that direction. But there's so many opportunities today. It's like you kind of sport for choice. When you get this many setups, it's difficult to know which ones to take. Just watch your exposure. Yen, exactly the same. So lovely sell somewhere around here, and then just shorts and continue if we're going to get the safe haven run happily. New Zealand, US, US dollar, obviously, this is the strength that they got off the back of the news. With the Michigan numbers coming out this afternoon and all the negative numbers we've had this week, if those numbers come out negative, this thing is going to be back up here. So I don't know, just finding it very hard to have faith in that move at the moment. But obviously you can see what's happened today. Yeah. So, just because we've had the big strong move doesn't mean it's going to hold. Yeah. So if it is going to be a continuation of an escalation of the conflict, which it sounds like, because obviously if Israel have said they're going to be launching this attack over multiple days, this is day one, isn't it? Yeah. So we've got 2 days worth of conflict. The market is not going to be able to react Saturday and Sunday. So today it's going to want to get its safe haven running. It makes sense today for us to get a big move on the Swiss, the yen, and potentially on oil and the US dollar. But, this is where you want to start thinking about it now. And then Monday, you could be very much quids in, couldn't you? US dollar CAD. So again, this one is an oil rally against an oil rally. So you can see this one hasn't moved an ADR yet. Reason being, if you've got a massively strong move and against a massively strong move, the US is obviously going to be the bigger party, the bigger, stronger currency, but this one hasn't done ADR, whereas everything else has done ADR. So this, if you buy it here, you're not necessarily going to get that massive movement out of it like you would with another currency pair. So US dollar CAD, not the greatest. US dollar Swiss, obviously the dollar is massively in decline on the back of bad news. You can see, obviously, it's weakened on... so where the dollar has strengthened on all the other pairs, it's weakened against the Swiss franc, which shows you the Swiss franc is way stronger than the dollar in a safe haven run. Yeah. So this is just the undoing of that. So I'd be looking really for continuation shorts on it. But it's hard to find somewhere to get in on this one. You're back up at ADR again. You've had a reversal along... a lot of people will be buying this at the minute. So it's hard to trade this, but I'd be looking for shorts out of here. I just don't think it's going to get there. So somewhere up to there. And US dollar yen. Again, more inclined to short it than long it. So propulsion would be a good area to get in short. So this is the dollar news. You can see it's not really moved far. So you've got strong move against a strong move, safe haven run against an oil run, not really gone anywhere. Same as the US dollar CAD. Those two are not going to move strongly in one direction or the other. They're both going to move strongly together, which means neither of them gets an advantage. So we just sit around. So not the best thing to trade. So if you're going to trade any kind of US dollar pair, you want to trade it euro, US dollar, pound, US dollar, not US yen, US CAD, US Swiss, trade every other cross. But loads of opportunities everywhere today, especially on oil. Yeah, this candle is going to be quite critical. If we close above that high on the oil, that is a textbook 3-bar reversal pattern. If we close above the open of that candle there, that is a strong reversal. If we were to close above the high of that candle, that's kind of a Superman reversal. So pull, pause, push. But, you know, oil, again, everything you do today is going to be difficult because you've got enhanced volatility. You've got news, which is going to skew it. You've got loads of things that could happen today. So be prepared for a lot of upward and downward movement, which is why I say you need to give yourself plenty of breathing room. Anything you use with tight stops, if you get it right and you happen to pick the bottom, you're going to get a huge risk reward ratio out of it. But the chances of actually trying to pick a bottom in this is very difficult, because you never know when this end is going, this run is going to be over, when anything is going to turn. Everything looks like it's turning. It's like, wow, look at that, beautiful, and then it just does this. So you've got to give yourself room around the movement to stay in the move, if you're going to hold it. But short-term intraday, do what you like. 5-minute charts, if you want to get in on one 5-minute candle and out on the next one, not a problem. But that's just trading choppy price action, isn't it? We're looking for potential continuation moves on the news. Let's see if anything news come in. No. Iran Atomic Energy Organization, damage sustained in the Natanz nuclear facility. No casualties reported. Okay. Right, let's quickly look at what's happening in the DAX. So gap fill underway. So there's your break of the 5-minute. So yeah, nice little move. Almost to ADR. Crazy, isn't it? You know, just be prepared at any time for something to be announced, and that, yeah, very big, strong movement to the downside if they get scared. Fear and greed index will be interesting this afternoon. Right, there we go. Covered everything. All done. So I'll be back this afternoon, and we'll look at obviously what's going on with this morning's news, if anything more is kicking off. We trade Michigan this afternoon. So 3 o'clock this afternoon, we've got University of Michigan coming out. That potentially is going to be a mover. It's Friday, and it's Friday the 13th. So the day that everybody blows accounts, if you are superstitious. It's Friday the 13th. It's not a good day to be trading. But anyway, it is a very good day for volatility. So if you can take advantage of it, brilliant. But be careful. Right, there we go. All done. So I'll be back this afternoon at 2:30. We'll obviously look at the US session, look at what's happening in the US markets, look at the DAX and everything. But only thing I'm getting into is that Swissy one. I think. Oh, I'm in. Euro Swiss, wasn't it? There you go. So triggered. So I'm triggered on the Euro Swiss. Well, that was quite a quick trigger. Yeah, so I'm in one short. Second entry short will be on a break up there above 225 ADR. So we basically got to put in a bull day. So the daily candle, if we do get up to there, is going to have to look like that. Huge wick. We will see. Right, have a good day. If you need anything, I'll be in Discord or Telegram. Back this afternoon. We'll see how everything's gone, but just keep the exposure light today, because at any point you can be completely in the opposite direction. So just be a little careful. All right, have a good one, and I will see you later. If not, back on Monday. Have a good day.